These escalating tensions now putting in jeopardy one of the strongest facets of this fraught relationship, trade. Joining me now from Beijing is Gong. He's a professor of economics at the University of International Business and Economics in Beijing. Good morning, Professor. It's good to see you again.
Thank you.
Now, so it's been half a year since the Phase 1 trade deal between Washington and Beijing came into effect. Where do we stand now, especially taking into consideration the impact of the coronavirus recession this past year?
Well, if you look at the statistics so far, for example, data tracked by Peterson's Institute for International Economics, clearly the purchase commitment coming from China is at this point is still falling short. And this is quite understandable because of the coronavirus impact. It has a demand impact on China. It also has a supply impact on the United States. For example, earlier in March and April, some of the slaughterhouses in the United States are affected by the coronavirus, and certainly that's going to impact its operations, which will percolate down to exports of pork and beef to China. But I think China is catching up very quickly. I think there's a statement from President Trump's economic advisor, Kudlow, saying that he is pretty happy with the current status. China is placing big orders, especially in the agricultural sector.
Professor,
what worries me a little bit is the energy.
Continue, please.
Okay. Yeah. So the energy sector is very unique in the sense that it's also affected by the prices of oil. Remember, when this deal was signed in January, West Texas intermediate price was around $60 a barrel. That means China has to buy a lot more, 50% more, if it's going to meet the purchase agreement in the energy sector. So I think these are the issues that both sides need to work out. I mean, clearly to me, this is a natural disaster. There's a clause in the agreement that's very much like a majeure kind of a clause. In that event, both sides need to talk to each other to work out something. So I think this is one area that both sides need to talk over.
Now, both parties are meant to review the progress of the deal soon. We're at about the 6-month mark, but ties are currently fraught, and we've just heard about the targeting of tech company ByteDance over TikTok, and we also know WeChat is facing possible bans. How will all of that affect the ongoing trade?
Really wants to put these things on the agenda in the consultation with the USTR, Ambassador Lighthizer. But I don't think that Mr. Lighthizer is entitled to talk about these things. I think he probably will push back and say these things are pertaining to the State Department, to the Department of Commerce. But I think from our perspective, we would view this in a broader context. I mean, it's really about having a better trade relationship, with a better economic relationship, and the current actions coming from Washington with respect to TikTok and WeChat are certainly not conducive to this better relationship. I mean, one of the guests on your program mentioned that it's extortion. I think I 100% agree with that. Having the Treasury Department having a cut out of the sales proceeds smacks of extortion, and I think it is indeed extortion.